So if I start with, like in terms of what's your worldview in terms of where do you think one should look at for investment perspective?
So my worldview is, it's something I didn't speak about in the presentation. It's actually not related to only from a purely investment perspective. If you actually look at history, and I'm talking about history over, possibly centuries, there is an argument people make that in any country's history, the period of maximum prosperity is most correlated to the period when a country moves from developing to developed. That is the period of time when the amount of prosperity, opportunity for every citizen of that country is at its historical peak for centuries. And you classically look at many cases in, let's say, the last 50 years, you look at Japan, you look at Singapore, you look at Korea, you look at Argentina that went there, and it is the one example where it fell off after that. And so therefore my one worldview is that actually when you look at our Prime Minister's version of Viksit Bharat, it actually means a lot more than that. It means that everybody sitting in this room and every investor has this historical opportunity to create prosperity because you are in that period where India will become developed from developing. It's never going to happen again because once India becomes developed, you don't become developing to develop to developing. वो नहीं होता है. एक बार developed हो गया तो developed बन गया. So that is, I would believe, my biggest worldview statement, that we should not spend beyond a point. We tend to think about equity markets in periods of 3 years, 5 years, 10 years. But the next 20 years, whether it translates into markets or not, I don't know. But the possibility of prosperity creation is that period, which is developing to develop, which is a much more certainty for India than, let's say, equity markets. That would be my view.
But there could be a very high probability that if it plays out well, obviously the capital market will reward.
It will.
Historically, at least India and US have done well. So there is no way to have pessimism on that side.
No, like I said, I mean, see, even if one argues at some level that valuations are expensive or whatever, what's going to happen? Markets will correct 10, 15%, 20%. Over 5 years later, I mean, I'll just ask anybody in this room, who remembers the last correction of 20%? The only memory people still have is a bit COVID March because that movement was very sharp. That also people now, kind of grin, कि हाँ, ठीक है, हो गया. So I think worrying too much about corrections and what will happen and missing the possible bus of developing to developed is a bigger risk.
I think you have a tie with the Manulife also, and I'm sure in that you must be meeting a lot of the foreign clients and a lot of global investors also. What's their mood in terms of towards India, at least specifically?
So that, Anup, is actually interesting and it's a little different. See, India on the equity side is quite a discovered market for global investors, to be honest with you. And actually not just Manulife, right? I probably more than anybody else spent time working with global investors because I've spent 15 years between Morgan Stanley and HSBC, both of whom do a lot of work with global investors. I think equity is a very discovered story in that sense. And global investors are broadly comfortable. They will always keep taking views relative to valuation, relative to their own risk. What is an interesting positive I'm seeing, which a lot of people aren't, it's not going to be so clear, it's going to be written in the papers. There's a massive amount of interest in Indian bonds. It's already reflected in the form of the amount. See, people only show slides which show FI net outflows in equities. But the FI flows in Indian government bonds has been a record in the last 1 year. And just remember, this is only the start. It's the first time we got included in an emerging market bond index. So we are actually having more conversations with global investors on helping them with Indian bond investing than equity. I have 3:1 conversation or 3:2, and more likely that I'm going to win the mandate on the fixed income one, because also on fixed income, bear you, it's not easy for a global investor to access because our fixed income markets are reasonably shallow, right? See, equity में क्या है? There are enough number of fund managers Singapore में बैठा है, Hong Kong में बैठा है, they will tell you what to do. But Indian bond, you don't necessarily, if you put it this way, the kind of offshore India bonds that are available in dollars in Singapore, Hong Kong, New York, are companies that issue bonds only there. They don't issue bonds here. We don't even buy these bonds here. Right? So the moment those global investors will start buying bonds here, it will have all kinds of implications, is my view. It will not just have an implication on bonds, it has a huge implication on dollar rupee. If it has an implication on dollar rupee, it has a huge implication on export earnings of companies and so on and so forth. So global investor interest is reasonably high, I would say this. And I believe in the next few years it will become even better. The only last point I'll make, a lot of people are, and this is also related to the fixed income part in some sense actually, people are also making positive calls on Asia versus the rest of the world. Within Asia, historically they are overweight China because they have made bets on China in the past. It hasn't worked out in a return perspective. And so therefore incrementally that is also giving a good impetus to India. That if I have to play Asia, then frankly the two elephants in the room are Asia, are China and India. You cannot beyond a point, and like I said, it's particularly true of fixed income. A lot of our global clients tell us, like, if you take any Asia fixed income mandate, the typical benchmark has about 45 to 50% China bonds. Because that's the size of that market relative to the rest of Asia. Now, assuming I have a client that says, given all that has happened in the Chinese real estate space, etc., मुझे उसको 15% कम करना है, 35% करना है, 15% आप कौन सा कंट्री का बॉन्ड में डाल सकते हो of that scale? India is the only new country that you can't go and put 15% in Thailand bonds or Indonesian bonds. So that is a very, very positive side. So it's not just equity, it's fixed income as well.
So again, you said that we are in that journey from developing to developed. In that context, what India can learn from the global economy?
See, what we can learn, and also, I think the whole world itself will also in the next 20-25 years, whether we like it or not, get changed quite radically. Given the way AI, etc. will play out, while in many other respects you could argue that we can match it with the best now, right? I mean, in some of the things we manufacture, many of the companies we have in India today are world class. But if at all I would say, are we at the cutting edge of AI right now? I would say no. And I think a lot of the rest of the world are like us. If you think about the whole AI revolution, I would say China and the US are in a different league. And so that is the one thing I would believe the government, there are topics they keep talking about. I think that is a space we'll have to pick up pace in a very, very significant way.
Interesting. So again, there are a lot of, let's say suppose one is AI, one issue. You touched upon tariff also. There are a lot of geopolitical issues are there. There are a lot of policy changes are happening basically. So there are a lot of risk are there. So do you think, though India over a period of time, as you rightly said, that ultimately end will happen, but whatever the risks in and around are there, do you think these are priced in, or one needs to be vigilant on that side?
So Anup, my point is I don't think they are priced in. The markets are in that sense expensive, but that is why I spent a lot of time discussing flows. Ultimately, if the power of the flows is high, if the risk on is high, people look at the very same risk and the same expensive valuations very differently. So I'll give you a very simple example. If flows were not that positive, if sentiment was not that risk on, the moment the Iran-Israel thing happened, market should have tanked on one hand and gold should have gone up. But because markets are risk on, because flows are very, very decent, people, what is the first narrative you read? That in the last 40 years of all the geopolitical conflicts that happened, In 1 month's time, the market recovered 90% of its return. So this time, why even waste time going down? If all we have to do after 1 month is come up. So to my mind, that reaction is not really it's a reaction based on sentiment and flow, which is currently the situation which we are in today. So which is why we are focusing, at least in the short term, a lot more on where flows are going. And as long as that argument, if you remember that slide, $125 trillion market cap equity, $313 trillion infused by central banks. As long as 313 is more than 125, at least directionally, which means the flow situation is decent, then all of these risks will get bought into at some point. It's not to say those risks will mean the markets will not contract at times. But in the long term, you know that the risk will get bought into because there is liquidity willing to buy.
So is there any area where it unease you in terms of there are risk or blind spot for this sort of over elevated valuations?
See, I would say hand on heart, and I think that's the only way to answer these kind of questions is what would I personally do with my portfolio? And I would honestly not be buying a small cap or a mid cap fund standalone at this point incrementally. I would be buying only multi cap and flexi cap funds because I clearly believe that there will be pockets of exuberance in only the specific caps. That's number one. Number two, if I have to flip it, unfortunately, and I may have contributed to this in the last 1 hour, just because in the next 6 years, 10 years, equity will do well, we must not forget the belief or the benefit of having the right allocation, asset allocation. Right? People have forgotten what it means to be correctly allocated and protected. And to that extent, multi-asset funds, I would believe, is another product people should be buying to deal with, therefore, any of the risks that one would see. Because these risks in pockets, at one level, the one thing I would recommend, although I'm not sure whether some of the customers you deal with have got into it at some point, which is that we must be a little careful not to jump too much into alternatives. See, there's this fascination that if I've now created so much wealth, I should buy products that the wealthy people buy. And there is a perception that wealthy people buy alternatives. I can tell you, ultimately, these are all derivatives of the same underlying market.
Perfect.
Right? You just simply, you had invested in equities, for example, or in Indian government bonds or the sovereign gold bond as a combination. Trust me, there's no alt guy that can beat you.
Correct.
Right? So I would say that is a bubble that can get created, particularly in private credit. People have already forgotten IL&FS. In a sense, you know, the kind of private credit alternative funds that are being launched, it's almost like a one-way street, and I would be very wary of them.
So that was my next question, and if you had answered, then probably we can move on. My next question was the same thing. What is the biggest behavioral mistake investors are making at this point in time? So is that one is your small cap, mid cap, one is basically finding alternate. Is there anything else you find needs to be touched upon?
No, you know, the challenge is because you ask the question, sometimes you are tempted to then answer that they are doing this. But if you ask me, it's stunning to see the way investors are actually not making mistakes. It's, if you think about this, Anup, and both of us have been doing this for 2-3 decades now. You just think of the way investors would react when markets fell 20 years ago, the way they used to, you know, what is to me the biggest change? Even 5 years ago, if markets fell, there will still be, I'm sure for all of you, some clients you'll call and sir, you should invest. They'll invest because it's an opportunity. Today, if markets fall 2%, nobody cares. Nobody is going to additionally invest because everybody is happy कि boss ठीक है पड़े रहने दो कोई tension नहीं है. So I don't think people are making too many mistakes right now, which is a good thing. It's one of those क्या बोलते हैं that in the last test they discussed that Shubman Gill's innings had the lowest amount of false shots in any century in the last decade. So that is something I think investors are doing right now, and it's reflected to me in the SIP numbers. The fact that the SIP number is at an all-time high, irrespective of the fact that you look at the yo-yo of market in last 6 months, it means that people aren't making mistakes. In fact, the very wealthy people may make mistakes. They may become too greedy into private credit, etc. But by and large, retail investors, I think, are playing very proper cricket at the moment.
So, is there any framework that investors should follow to play defense?
So that's what I'm saying. The framework is not to get too carried away with the successes of the recent past and make sure that, like I said, if arguably we are all somewhat aware that markets are reasonably valuation wise rich. At the same time, and I don't know whether any of you will agree, when you go to customers today, at least today people talk about क्या market ज़्यादा ऊपर नहीं लगता है, should we be taking some money off the table? And yet, if at all there is a behavioral thing which is striking me as odd, is hybrid flow collections have actually got lower, not higher. I would have thought that's the most logical thing for somebody to do. If you think that equity markets are somewhat valuation wise rich, your next investment should not even be multi-cap fund, it should be aggressive hybrid or it should be equity savings. But that's not happening. So I would say that is, and I think it's a challenge for all of us in the ecosystem, right? Because every sales guy, Ashish has a sales target. So at some point, we talk about this, that we have spent the last 2 years pushing our multi-asset product very hard. But when you push it in an environment that is not willing to sell it, it comes at the cost of, "Arey boss, if we had sold our multi-cap fund, probably paisa aa jata." Because you're forced to sell what the customer thinks they want. You are not selling what the customer needs, right? That's the challenge.
Yeah, interesting. So I think there is also, if you look at in last 4 years, a lot of people got into markets and now they wanted to become the sort of fund manager. They want to play that role. How worrying is that? Like, do you think that it is better to give money to investment professionals and over a long term he will justice for his investments? Or is there any change happen just because of the democratization of information available of everything else?
I can only say, see, the problem is people will still get caught up in it because we are in a situation where, at least in the last 30 years, there was never, and I think even if I worked for 50, 60 years before that, there's never been a 6-7 year period where markets on a calendar year basis was positive at the end of the year, year after year. So people have this sense that it can't go wrong, right? There is one section of them who already discover it, but they still do it, which is FNO guys. Year after year, 90% of people lose money in FNO, but I'm guessing that's like almost like people think it's a toss of a coin, ठीक है, इस बार heads आ गया, next time तो tails आएगा ही आएगा, kind of thing. In equity investing, see, you'll discover, ultimately, Anup, these new investors, they'll have to discover it by making the mistake. No other way to discover it. See, I'll give you personally, I stopped investing directly in equities a long time ago because I had to invest and discover that, boss, had I just invested in my own mutual fund, I would have been richer. It had to happen 1 or 2 times. Then only I stopped. No.
So your and my stories are same.
Yeah, so it is, in fact, in my personal portfolio, I still have 2 stocks, which are down, one is down 97% from purchase price, the other is down 95%. And I only keep them there. They have been in my portfolio for about 12, 14 years now. I only keep them there to remind me that, boss, this is not what you should be doing. You just invest in a fund, aggregate. But people will see, all the investors, all your investors who have been with you for 10, 15 years, I don't think they worry. They don't ask the question of, oh, I should buy this stock or whatever. People who've come newly, yeah, maybe they will believe. In fact, I could extend the argument. Many of our investors believe that they become fund selection experts as well, which is an even more worrying trend. It's no longer about finding the right stock to buy basis analysis. People think that, ये small cap fund अच्छा है, right? And it's struggle for distributor to then tell the customer कि sir शांत रहिए, it's okay.
Another thing is observations are Indian investors are over invested domestically. What's your view on that? Do you think India is not the world and they should have some allocation outside India?
I would make two statements. I think broadly, at least, and this is statistics, so there will always be reasonable number of exceptions. I think broadly speaking, Indians are underinvested in equity relative to where they should be even today.
Yeah.
Right. So that is a given.
Yeah.
Having said that, if you had the opportunity, should you be diversifying outside India? I would be a very strong proponent of it. Very strong. Because, in fact, as you know, I'm actually, after this discussion, I'm off to Hong Kong
Yeah.
for a Asia strategy. I will be the only country talking where my customers only are really investing in our country. No other country in Asia, none of my colleagues are going to be discussing that. So when they put up the list of the funds they have sold, it's not like my Malaysia guy does not, his best selling fund is not Malaysian equity. His best selling fund, by the way, coincidentally is Indian equity. Okay. The only other country slightly similar to us, by the way, is China. They raise billions of dollars selling money market funds of Chinese bonds, which is fine. But I'm just saying, I believe diversification is a very, very powerful thing. And also, some of our customers are reaching points where also some of it is not just related to an investment need, but a lot of people are sending their kids overseas for education and stuff. So having things which are dollar denominated is also not a bad thing in that context. So I'm a strong proponent of it. Unfortunately, it's not very efficient because obviously the feeder fund route for us is right now curbed. LRS with the TCS, etc., is a little complicated, right? Then you need, see, if as a salaried profession, for me it's very easy because I can still invest overseas, and even if there's a TCS, for me it's just a substitute for an advanced tax. But for a lot of people it's not, it's just very cumbersome.
So if I had to ask one simple question, what is a sound investing?
A sound investor is a person who does not spend more than, firstly, 2% of their time investing. Meaning, they are not somebody who opens their portfolio every weekend on Saturday, Sunday to check what happened to the portfolio. With the first sound investor who reviews their portfolio only monthly and not daily, weekly. That's first characteristic of sound investor. Second is, if I have made investments in a way that I am not able to fall to sleep instantly, either because I'm too excited about an investment I've made and how it's doing, or I'm deeply depressed about it, you are not actually a sound investor. If you're a sound investor where every day when you go to sleep, you don't think, investment is not coming in the role of whether you're sleeping quickly or not, right? That is the second. And the third, I would believe, especially given that because we are in this period in India, a sound investor is a long-term investor. Any short-term investor cannot claim to be a sound investor.
Is there any one money lessons you learned very hard?
To listen to myself. I've said this, in fact, just a couple of weeks ago, I was doing this interview with ET now, they were doing their 16th anniversary, so Kavita is a dear friend, she asked me, Anthony, what would 50-year-old Anthony tell 25-year-old Anthony? I would be like, to listen to the gyan you give other people, aap khud karte to boss 50-year-old Anthony would not be working, right? So the fact is, I would say frankly, this concept of investing long term, not complicating it, I genuinely have started doing it personally only in the last 5-7 years. So to a lot of the young people, I see so many young people, no, I think that's the one message I would give you ki sabse boring SIP karo ek diversified equity fund mein, you will remember this conversation when you're in your 40s and 50s like us with a lot more joy. Problem is that when I was your age, I told a lot of other people to do SIP. I didn't do it as much as I should.
Interesting. I think I also start after decades when I started my career. So I started career in 99, started SIP maybe in 2010, 2009.
And Anup, I know you, so I have a feeling that you have the same problem that I did. Is that we get so obsessed in the business we are trying to build ना कि खुद का portfolio का कभी करते नहीं है, बाकी का करते हैं, but you don't do your own thing. At least that's something I have never really done enough of, but it's not a regret. God has been kind, so I don't have that regret. But yeah, if I was to wind back time, I would definitely listen to myself a little more.
Secretly, you have opened the weakness actually.
Yeah, no, no. So I tell
It's a fact.
I tell people that when SEBI introduced the skin in the game, if they had done it when I started my career,
You would
I
have-
would be very wealthy. I would be very wealthy because then without choice, I would have actually
Yes.
invested regularly in markets.
Yes, yes, yes. Is there any one personal finance habit you still trying to build and still struggling?
Actually, the challenge is to only answer one. There are more than one.
Any one or two comes in your
Yeah,
top
no,
of
no. I'm
mind?
just thinking. No, like I said, I still think I'm not. One habit I have is I am a very sound investor but I am on the other extreme. I don't forget my portfolio looking at it every month. I don't look at it for a year
Yes.
also. Like मतलब portfolio का जो हो रहा है मैं देखता नहीं हूँ. And I think being able to review it at some point, at least every 3-6 months, is important. The second is the question you had asked earlier. I genuinely have to do more international diversification. The third is more, it's more, how do I put it? I'm going to use money to indulge myself as a hobby, but maybe it will make a lot of money, which is, I'm very fascinated with the world of angel investing actually. It's not because I want to be buying into the next Zomato at a very early stage, but I'm fascinated to see some of these stories and the businesses these people are building, and sometimes you learn so much from that. So that's the third thing I would like to get involved in, because I think there'll be a lot of personal learning from there. I mean, it may sound very quirky, but one of the favorite television shows I watch is Shark Tank, India, because it's just wonderful to listen to all of these guys and the businesses they're looking to build. So these are three. Like I said, there's no one because बहुत सारे हैं.
Acha. So you help me in terms of if you want, if you're in my shoes, how to identify a good money manager.
I don't think it's very tough. Honestly, it's about, in fact, a problem of plenty. If you think about it, there are 46 mutual funds. I don't think hand on heart any of us can stand up. I think we should be all collectively quite proud that we have 45 fairly decent fund houses, right?
Yeah.
So eventually, you got to narrow it down to conform to your business objective. See, your business objective is, how am I going to impact the lives of much more people than I have?
Yeah.
That's your only objective in a
Yes.
sense, right? In which sense, whether you like it or not, I'm not sure that you can then go and be nice to 15 fund houses. And given that all fund houses mota moti, I would say picking any five, and those 5-6 will be a motley bunch of smaller, medium, large size, is good enough, is what I would say. So there's nothing that kind of calls out one fund manager. Certain things, yes. When you asked about international diversification, over time, I'm saying it is possible that international diversification comes from a bunch of fund managers, fund houses that are not everybody is able to offer.
Of course.
Those niches I'm not talking about, right? But broadly speaking, into the core business of mutual funds, I think you could probably put all 45 hours, throw darts, जो 5 है वही कर लो, कुछ नहीं होगा. That's one great thing about our industry. Everybody is good.
Another question. The people who are, let's say, under 30, these people, and if they have a spare time, how they should use or where they should spend their spare time? Like, is there any maybe piece of advice?
Even if I give them advice, they would say I'll use the spare time to enjoy life, which is also a fact. I think problem is that doing all of this is for what? If there is one thing that is becoming an emerging trend, see, when you and I started working, there was no concept called work-life balance, right? Today when we have become older, we are seeing the value of work-life balance. Do we have enough time for family and stuff? I think the younger generation has learned it pretty much early. Ki boss, if I'm going to work really hard, then I must use the spare time to do something that makes me happy. That's what I would answer, right? Whatever makes you happy in your spare time, do. For somebody, it may be somebody's interested in learning dance. For somebody, it is art. For somebody else, it is just watching Saas Bahu serials. I don't know. It doesn't matter. Because at the end of the day, as long as with your spare time you are happy, that happiness will reflect in your work life. The only thing I will say, if it has to be correlated professionally, is that the learning you have about your work, you cannot believe that that learning will only be in the workplace. You have to have a very open mind to learning. I can tell you, if anybody looks at my Twitter handle, you'll be surprised. I don't tweet. I very carefully choose who I follow. So I open my LinkedIn about 10 times a day, because not because I am obsessed with social media, but somebody the other has posted something that's interesting to read. It's I've learned. So I would say, using that opportunity, don't keep your learning of which, even if it is work related, and it doesn't need to be. So I'll give you one example. I listen to podcasts a lot. Also because my office is in Kurla, so the drive is a long drive, and FM ka kya hai, wo same gana is a problem. So I listen to some fascinating podcasts, and we can get into details. Some of those podcasts, you will say, what has it got to do with your work? It has nothing, but it just
gives you a lot of perspective.
Yeah, I listen to Nikhil Kamath, I listen to a guy called Nikolai Tangen, I listen to football podcasts. It's just, everybody has a different perspective in life, you learn. But mota moti my answer to all these 20-year-olds, 30-year-olds, in your spare time, do what makes you happy.
Interesting. Maybe to us and maybe a senior people in the team, you have spent reasonable time and leading the team successfully and almost in variety of organizations. Any key lessons, probably you'll pass it on to us in terms of what as a leadership role one should keep in mind and make sure that.
See, I would say two things. Some people would argue that it's not necessarily a positive. I tend to lead with a belief that everybody is good. I don't try to lead to think that if I put somebody under pressure, that will only make them. I believe if you motivate somebody, they will really deliver. But I have very little patience for people that I cannot see fire in the belly. If you don't have fire, wo junoon nahi hai na boss, then this kind of work we do, it will become a boring. If you have to love it, you have to have passion for what you. So that is the only thing I would tell the senior people in the room, that you have to hire people and keep people who have the fire in the belly. As long as you have the fire in the belly people, and you lead them with a perspective that these are going to be superstars, they end up being superstars, is the way I have operated.
How do you define success?
I don't define success, because I actually, and it may not be a right thing, because people always, in fact, as parents, we tell our kids also ki boss zyada comparative mein mat jao. But I also believe that in especially the economy and the situation we are in today, success has to be relative, because in absolute terms, we were 10,000 crores 18 months ago, then we became 20, now we are 30. So I will say, oh, I'm very successful. But when I look at it relatively, there are others also who went from 10 to 30, there are some who went from 10 to 40, there are some who are 10 to 10. So for me, success is always then a relative thing. Because if you don't find a way to push yourself again, then I don't know. I mean, there's a medical term for it, and I think I am neurotic, which means that even if my business has grown, I operate with a view ki kuch na kuch to hoga. So you should work even harder so that you can keep going. So I had never really stopped to say this is success. Now, obviously, the difference in the business you run is you run a business, right? I'm an employee, and so success is in a corporate a function of business plans and targets and stuff like that. So we have all of that, but I don't honestly. My boss hears this, but my bosses know this. I don't work on business plans, because I just think if there's an opportunity to have grown 10x, you should grow 10x. Just because your business plan says you should grow 2x, you shouldn't pat yourself on the back that you grew 2.5. That's the way I define success.
Uh, any thoughts on how you define a life well lived?
How to define
Life well lived.
happiness only. I think genuinely, if you can answer to yourself that are you happy, and I don't, I don't, I'm not assigning emotions beyond a point. I'm not saying money, whatever. Frankly, I think all of us know whether we are happy or not. Fundamentally, inside you know. It may not be, as long as you're, to me, life well lived, and I know it may sound very philosophical, but I am very, very clear that for me, I have to be happy if whatever happens in, especially including, see, you obviously you can't change your family, sir, you are part of that family, but if tomorrow I was working somewhere and I genuinely was not happy, I would leave.
No, no, I 200% agree with you. And this is most of the times, even I talk to my team, ki regardless of, we are putting so much of everything else, and at the end of the day, if you are not happy,
Yeah,
it
yeah.
means something is not, we are doing rightfully.
Yeah.
And whatever we do at the end of the day, we should feel happy. And one thing you also touch, at the end of the day, when you go to the bed, you should peacefully sleep. Like, and just जाके नींद आनी चाहिए आपको. So don't do anything else where it bothers you.
No, absolutely.
Any final thoughts you would like to leave with the audience? You are also on the Amphi committee.
Yeah, no, so, yeah, okay, so I'll tell you, it's a, I could have made a very different presentation, but, and we discussed this a little bit, but I do this with some of the larger distribution forums, that somewhere our industry is guilty of defining every success metric in whatever way by AUM. Like including like when Ashish and we still do it, right? I mean, when you're like which distributors to focus on, how AUM wise list nikalo. And I genuinely think we are missing the wood for the trees, because if you look at a lot of data points, what is going to be the number of people who can invest in mutual funds, that is going to grow up 100x, 10x. So not too many of us actually focus on measuring success by the number of customers we add. And I'll add one element to it, and I have a slide typically I use. I said KYC is good, and that normally in a distribution forum is like, boss, what are you saying? KYC is good. But I say KYC is good because when you ask anybody in this room, right, and these are all front office people, I ask anybody in this room, who's the most irritating client you have? Like, typically 10 seconds you'll get the answer. You know. Who is the nicest client? Who's the largest client? All of those are 10-second answers. But the answer you will struggle to give is when I ask you, which is the client that surprised you in terms of how wealthy that client became in the 5 years you have serviced? We don't think about that. We don't understand our customer enough. And I'll tell you, the way some of the income levels of our customers will rise, even we will not know. And being able to understand that and being able to order your priorities around such customers is very, very useful. And when you have a acquisition of customer as your primary goal strategy, I think that's going to be the winner in the next 5-10 years. Rather than saying, boss, 1000 crore ka EUM hai to 10,000 hona chahiye. My point is, if you are able to grow your customer base 5x in the next 5 years, your AUM is going to be 20x automatically, is the better way to think about it. That's the last word I would say on that.
I think it helped me a lot. I think it answers what we are also set up goal for ourselves in terms of, and please trust me, this is not a setup conversation. Please.
No, it's not. Some of these topics that I spoke about, I've delivered these at distributor association forum meetings in the last 6 months.
So our conversation will be there. It's a gold standard conversations, comes with the 3 decades of experience. And I must tell you, when I started my career and when you are starting at your career, I envy your career, because I did not got the kind of exposure the people like us or everything else. You guys are getting in that. Please make sure that make a use of it. Remember every word what the chief said. and help client. मतलब again, what he started basically, not only what he, मतलब when we were doing the conversations, and we were just asking because he is on the chair of the amphi, and again the discussion is basically कि why so much of hustle at this age, like everything you have achieved in your life, name, fame, I'm sure पैसा बोलने की ज़रूरत नहीं है. Why so much things, and again why these people rise again saying that ki boss, how do I give back to the society? Like again, why he is on the board of amphi, he want to give back to the society, whatever he learned, whatever he achieved, he want to give back to the industry, and that's where he is there. And he spent maybe equal amount of time in the all the affairs what happens to the industry, and it comes randomly, it doesn't come in a very organized fashion कि अच्छा यही time पे होगा, ऐसा होगा, fire fighting होता है, like, and that's where. So please listen, and really appreciate. Thank you.
Thank you.
Big thank you for your time.
No, thank you. And I, like I said, I should have said this in the beginning, but to see so many young, energetic faces in the room who are spending their life, selling investment products to people, makes me feel very positive, because not from our industry perspective, etc., but genuinely, like I said, when we started 25, 30 years ago, I was genuinely very, in retrospect, when I had that slide which said skill, luck, I was lucky to join this industry. Right? I may have been a chartered accountant, but there's no knowledge that you should join. In fact, people would have said joining a mutual fund is the worst thing you should do. You should join consumer finance, this finance, that finance. But God was kind. Somewhere I decided to join a mutual fund and I fell in love with it. And I'm hoping that all of you are already in love with what you guys do.
Yeah, yeah. And I echo his thoughts, and like genuinely I feel myself, like I'm lucky, at least I got into this, and I met a lot of smart people, and like good people. What is more, not smart but good people, and that's the ripple effect that you also try to become a good for others basically. Thank you very much once again.
Thank you, Anup.
May God give you a good health and long life.
Thank you so
Thank you.
much.
Really appreciate it.
Thank you.